because the trend has been changed. Why? Because the 50-minute was bearish, right? 50-minute was bearish, 4-hour is bullish. And if the last recent supply zone changes here and is being broken and the breaker demand zone is being confirmed, that this will be confirmed as the pro trend. So this kind of continuation will be a pro trend trade, not a counter trend trade. So pro trend trade criteria apply for this kind of a trade. Okay, let's see. This is a continuation trade too, but you still need the same base criteria as for the change of character trade, because you will search for a change of character trade right here. You will search for a change of character trade, but this is still a continuation trade because price is broke above supply zone and respected the demand zone. Continuation trade, but with the same base criteria as for a pro trend trade, because the trend has changed. Trend has changed. Make sense? Does it make sense? Come on, guys, fast. Does it make sense? Okay, it does. Perfect. Remove it. Thank you. So, okay, this is the first criteria. Higher time frame zone tap. Second criteria is liquidation. You have to have liquidation for a counter trend. You have to have liquidation. This is the most important part of the counter trend trade. If there's no liquidation, you're not going to execute a counter trend trade. So here's the same scenario: 4-hour bullish, 50-minute bearish. For example, here's demand zone, right? Price taps this demand zone and creates liquidity above this demand zone. If there's no liquidity above this demand zone, so this liquidity is doesn't being swept into this demand zone, or for example, price has created double bottoms here, and you're going to have liquidity. But the only important thing is that price has to sweep liquidity into this zone, or has to create the second type of liquidation where it creates liquidity for the entry zone right here. If this kind of a counter trend trade doesn't have liquidation, we won't trade it. So if you can't see liquidation on your screen, you won't search for an entry opportunity. If there's no liquidation, you are not waiting for an entry opportunity. That's it, period. This is it. Third, inefficiency. After the zone mitigation, just as in a pro trend trade, you have to have inefficiency. This is a really important base criteria. Okay, this is simple. I won't explain it. Strong change of character is the fourth. It has to happen with inefficiency, right? So if there's no strong change of character, so the same scenario goes on, price coming down, mitigates this demand zone, and this is the 1-minute structure. Oh my Jesus. So this is the 1-minute structure here. This will be a strong character changing zone. This is the 50-minute supply zone. And if price can break over this strong character changing point, then you won't enter in a counter trend trade. But this has been explained in a webinar too. This has been explained in a counter trend trade webinar too, so it will be required to watch. But if price can break above a strong character changing point and can change character enough strongly, then you won't enter. This is a base criteria too. Okay, liquidity to target. This is a base criteria. For a counter trend trade, this is a base criteria. You have to have liquidity to target. What could be liquidity to target? So I will just focus on this region. So I will just ignore this region and focus on this region right here. Okay, so you have this 15-minute supply zone up here. This is this 15-minute supply zone up here. And, here's this demand zone down here. So, this supply zone is this supply zone. This demand zone is this demand zone. So just clarifying. So price is coming down. It's creating the 15-minute bearish trend, right? It's coming down. Here's a 15-minute bearish trend, creating this last recent breaker structure, creating this last recent supply. So, for example, price creates liquidity here below this supply zone. Perfect liquidity will be created below this supply zone. Liquidity. After this, price steps into this demand zone, mitigates the 50%, creates a strong change of character to the upside, and, for example, creates liquidity to take. Here will be liquidation, right? Liquidation will be taken. This liquidity, these double bottoms will be taken. Price steps into this entry point. You're entering here in a counter trend trade. Here's liquidity to target. This is liquidity to target, and you can target this liquidity with your longs, with your counter trend trades. You are targeting this liquidity with your counter trend trades, the highest point of the liquidity right here. If it has been targeted, if it has been created, it can be targeted. This is a liquidity target. Or other scenario could be if price creates higher time frame liquidity target, as I told you, on the 50-minute. So this with the 50-minute liquidity target right here, double taps on the 50-minute chart. You can target this with the counter trend trade. That's it. This is a liquidity target. This is the liquidity to target. Okay, and these are the must-have criteria. These are, no, you can't consider decision zone as a liquidity in this case. You have to have a double strong change of character. If this zone is being broken, but the price can break over this zone, yeah, that will be I'm in this zone. That could be liquidity take. But if price can break above this zone, that will be the only entry opportunity. I mean, you'll be able to search for entry opportunities after this high is being broken. So these are the base criteria. These are the base criteria that you're going to have in order to search for an entry opportunity. So this is 1, 2, 3, 4, 5. You need 5 criteria to just look for an entry. If these 5 criteria aren't on your screen, if these criteria aren't on your screen for a counter trend trade, you're not going to search for entries. After these 5 criteria are on your screen, so you can see these criteria on your screen, then you can add your variable criteria up. These are the variable criteria for a counter trend trade. Entry type, so strong change of character slash double zone breaking flip, is the same. The double zone breaking flip is that price reacts on this zone and flips it. That's it. Or reacts on this decision area and flips the upper one. Two highs in this short trend has to be broken in order to execute a trade. I don't care if it's a strong change of character or it's a double flip. 2 zones, 2 highs have to be broken. That's it. This is the first variable criteria. Of course, it's a variable too, because you don't know if a flip or a change of character will be formed. You have to see, you have to wait for a change of character or a flip. So after these criteria are fit, after these criteria are on your screen, you can add your variables up. First will be the entry type. For example, entry time Forbes. That will be the 6 criteria. Strong reaction, V-ship can be also formed. Price isn't coming from opposite sided zone. 50% mitigation and combined liquidation. I just explained everything in the pro trend plan. You can count 10 criteria altogether for a counter trend trade. The more criteria you have for a trade, the higher probability the trade will be. For a strong counter trend trade, you need 8 or 8+ criteria, but I recommend the 8+ criteria. I recommend the 8+. I recommend 8, 9, or 10. Basically, counter trend trade will be the highest probability if it has full criteria, or 9 at least, or 8 at least. But 8+ is the required for me. It's my own personal thought. It's my own personal thing. I need 8+. So, for example, 9 criteria for counter trend trade. I'm rarely taking counter trend trades with 8 criteria. Okay, that's it. Exact same thing as it was in the pro trend trade. All you have to do is wait for these base criteria to appear on your screen. And after the base criteria, you can add up your variable criteria. And you have to do the same, just like in the pro trend trade. You have to gain data. You have to gather data about the trades, about the criteria. After you've gathered data, you'll be able to assemble your own plan with your own criteria. That's why I call it a personalized trading plan. That's why it's a personalized trading plan, because you're going to backtest your own criteria. You're going to have your own working criteria. For example, for me, I would say I will need 9 criteria for a counter trend trade. These 9 criteria will have 60% win rate, for example. You find 8 criteria that are working for you, and you're going to have the same 60% win rate with these 8 criteria. You're going to wait for these 8 criteria. I'm going to wait for these 9 criteria. You're going to enter when I'm not. I'm going to enter when you're not. Same. You have to backtest it for yourself, because my trading plan can be yours. You have to assemble your own trading plan, because each individual will have a different trading plan, right? I'm going to trade completely differently from you. You're going to trade completely differently from me. That's why it's important to have this trading plan. That's why it's important to have this personalized trading plan, because you have to create and backtest your own criteria. I'm just giving you help with these base criteria. I'm just giving you help by showing you the variable criteria and how to assemble a plan. Okay. Next, not next. Next and last is exit. Exit plan for each scenario. Okay, exit plan. And criteria aren't the only important parts of this plan. You have to have plan for the exit points too. Mainly there are 4 outcomes of a trade: stop loss, break even, trailing stop loss, and TP. 99% of the time, I'm using these 4 outcomes. I'm not using manual stops. I'm not using manual closeouts. I'm not using manual TPs. I'm rarely using manual closeouts and manual TPs. When the session is over and I just have to go away from the monitor and can't monitor the trade because I have other things to do, then I'm manually closing out the trade to actually secure the profit if it's running well. But 99% of the time, I'm using these 4 outcomes and no other option. No other option. I'm just using these 4 outcomes. First, stop loss. Basically, there's nothing to explain about the stop loss, right? You're going to hit stop losses, you're going to hit break evens, you're going to hit loads of stop losses. It's part of the journey. That's it. No further explanation is needed for the stop loss. Break even. There's two options on setting a break even. If price breaks the last recent higher low on a short-sided trade, or breaks the last recent lower high on a long-sided trade. But it's being explained in the webinar, not webinar, sorry, main course. I believe it was in the 5th-unit third video. Yeah, it's being explained in the 5th-unit third video. So just watch it if you don't remember. Or it shows a strong reaction on the last recent opposite side zone. So if you're in a trade, for example, price is coming down, here's a demand mitigation. It's a pro trend trade. You have all the criteria. You enter here, and here's the supply zone. And price shows an insanely strong reaction on the supply zone, taps this supply zone, mitigates the supply zone, and prints a huge V-shaped recovery and reverses immediately with 2, 3, 4 inefficient candles. In this case, I'm usually setting a break even. If I see this, I'm usually setting a break even. That's it. No further explanation is needed. Third, trailing stop loss. The concept is the same as for the break-even set. In-depth explanation has been given in the core course, 5th-unit, third video. That's it. Pay attention to don't manage your trailing stop loss under the, in a long trade, liquidity pool, or above, in a short trade, a liquidity pool. And that's important to don't trail a stop loss above/below a liquidity pool. If you trail a stop loss into a liquidity pool, then your stop loss will be the liquidity for adverse trade. If there's a liquidity pool and that's the last recent higher low that you can set below your stop loss, just keep it in break even. So for example, your trade is running well in break even because it has you did enter here. It's running well in break even because it broke above this. No, sorry, it broke above this high point. So it's running well in break even. And for example, price creates this pullback, creates liquidity at this region, creates another breakout structure. And in this case, normally you trail a stop loss into the next recent below the next recent low, right? But if it's a liquidity pool, you just keep your stop loss in break even. If price creates another liquidity pool here, breakout structure, you still keep your stop loss in break even. That's it. You don't want to become liquidity here. You don't want to become liquidity here. Okay. Next, TP. Target point settings have different views for each trend. Okay, TP in a counter trend. In a counter trend, your TP should always be 1-to-5 risk-reward ratio from your entry or on the last recent 5-minute opposite side zone, as I showed you. No further explanation needed. I showed you this 1-to-5 risk-reward ratio away from your entry or the last recent 5-minute opposite side zone. TP in a pro trend. TP in a pro trend could be different for each variable also. Yeah, explained in this FICE webinar. I'm going to explain it now. So just let's scroll back to the pro trend trades. Here are the pro trend trades. So first scenario, 4-hour bullish, 50-minute bullish. 4-hour bullish, so 4-hour structure looks like this, right? So this will be the 4-hour structure, and the pullback is coming with a bearish perspective. This is a bearish perspective. Here's the 4-hour last recent demand zone. Price steps into this demand zone, creates a change of character on the 50-minute chart. After this, it will print a 1-minute structure down to this 50-minute zone. And after this, it will create a change of character to the upside. And if this fractal confirmation, yes, this is the fractal confirmation. It has been explained in the fractal confirmation webinar. I just collected it into this file. You'll be able to see that. If the fractal confirmation happens, so this fractal confirmation happens, and you can enter right here at this zone. Your TP point won't be the next recent unmitigated 15-minute zone. You can actually TP for swings. It's safest to enter, I mean, safest to target, for example, last recent 50-minute zone right here, but you can actually swing TP the 4-hour high because you're going with the trend, because price is moving in an extremely bullish 4-hour trend, and you can swing TP the high point, the last recent 4-hour high point, and between this low point and between this high point, there could be, for example, like 30 to 50 to 60 to 70 risk-reward ratio. That's how I code the 33 40 risk-reward ratio in June. That's how I code the highest risk-reward ratio trades. Basically, the same scenario went on for my trade. Price was bearish on the 4-hour, 50-minute confirmation happened here, 1-minute confirmation happened here. I was targeting the low point. That's it. I did collect 40 risk-reward ratio at this trade last month. This is how you can collect the highest risk-reward ratio and highest probability setups. That's it. Second scenario. Let me just remove this. Second scenario If the 4 hour is bullish, 15-minute is bearish. And sorry, this 4 hour bullish, 15-minute bullish goes on the vice versa. Of course, the bearish scenario, it goes on the bearish scenario to you TP this one. So second scenario, 4 hour bullish, 15-minute bearish. What can you TP in this scenario? If the 4 hour is bullish, so it's printing this bullish 4 hour structure, but the 15-minute turns into bearish. So as I showed you, this will be the 15-minute structure, and you can enter on these 15-minute zones. We've seen lots of examples in the past for this kind of scenario, and you can enter on these zones, on these 15-minute zones. What could be your TP point? You have two TP points. The first one is the liquidity target. So the liquidity will be the week low. As I told you in recaps and webinars, a week low is a liquidity. The only purpose of this week low is to collect liquidity. So your TP could be liquidity target, this week low point. That's the first target. This will be, for example, like 1 to 10, 1 to 15 risk-reward ratio away from your trade. That's your first target point. It depends on you. It depends on what kind of risk-reward ratio satisfies you. Second target point could be, for example, a 15-minute zone inside of this 4 hour leg. This is your, sorry, there are 3 scenarios actually. So this is your second TP point. This could be a good TP point too, but you can actually expect a reversal after the break of this low point because this is how structure works. Price collects liquidity from this region, from the week low, collects all of the liquidity from this week low, and from the liquidity collection, it will reverse to the upside and create another tap, another breakout structure to the downside. This is how the structure works. So this can be your second TP right here. And the third and final TP, you can TP below of this demand zone is the 4 hour zone. You can TP the 4 hour zone. You can TP the 4 hour strong low. This is a strong low because it breaks above the last recent higher point. Or less TP, or your less TP for this kind of a prudent trade will always be this demand zone. So if you open a position, here, because here's this less recent 15-minute supply zone, and this is the less recent unmitigated zone, this 4 hour zone, you can final TP this zone. That's it. That's it. Okay. Go back. Exit plan. And yeah, that's it. Here are the required webinars to fully understand the concepts. I just collected all of the webinars: fractal timeframes, counter trend, main trend, difference between a change of character sweep, weak change of character, strong change of character, cancellations, flip, change of character, logic of the flip, highest probability setups. You have to watch all of these webinars. And that's it. It's a simplified trading plan, personalized trading plan that you will be able to assemble after you backtested. That's it, guys. It doesn't need further explanation. It's simple as fuck. It will be simple as fuck for you to execute. It will be simple as fuck to actually build. That's it. So yeah. I will just stop the recording because it will be uploaded to the Discord.